The national average of interest paid on a savings account is 0.10%. Wealthfront claims to be able to pay 2.51%. But is it real? Let's find out. Inside this video, you'll learn the advantages and disadvantages of a Wealthfront cash account before you decide to move your hard-earned dollars. We'll also answer 3 questions everyone wants to know about the Wealthfront cash account, like what's the catch behind the 2.51 annual percentage yield? And how exactly can Wealthfront offer such a high annual percentage yield? And is the company legit and with a legit offer? Hi, my name is Dee and welcome to the Money Growth Academy, where we give you the tools to master your wealth to free yourself, and where you'll learn the practical and tactical knowledge and skills to improve your EKG. That's your ability to earn, keep, and grow your money. Well, exactly who is Wealthfront? Wealthfront Incorporated is an automated investment firm, or robo-advisors, what they call them today, that offers investment options, a cash account, and financial planning. The company, based out of Redwood City, California, was founded in 2008, and as of March 2018, had more than $10 billion of assets under management. Now let's review the advantages and disadvantages of a Wealthfront cash account. We'll start with the advantages first. A Wealthfront cash account is FDIC insured up to $1 million. That's 4 times the insurance coverage of traditional national banks. Well, why would they do that, you ask? Well, to entice more account holders to consolidate their multiple accounts from other banks all into one bank, and that is Wealthfront. Most people divide their investments and their savings over multiple accounts because most financial institutions will only insure up to the federal minimum of about $250,000 per account. To offer you that $1 million FDIC coverage, Wealthfront uses more than one bank to hold your money. Now, these banks are called program banks, which Wealthfront will actually disclose to you on their monthly statement. They even tell you which program banks your money is being held in so that you'll know. So nothing's hidden there. It's all out front, very transparent. Another advantage is you have unlimited withdrawals, so you can move your money in and out of an account as much as you want. Now, how is this possible when other banks only permit 6 withdrawals in a month? How's this possible? Well, it's because your cash account is not actually tied to a money market fund. So you're able to pull out your money as needed. Your money is actually held in cash at various unaffiliated banks called program banks, as I just mentioned before. And it is protected by that $1 million FDIC insurance, hence the name Wealthfront Cash Account. Also note that when you do want to make withdrawals, it will take between 1, maybe 3 days for your withdrawal to arrive in your bank. So you want to make sure you plan accordingly. Another advantage is that Wealthfront makes it easy to transition from using their savings account to moving into their investment plans from your cash account. You can set automatic monthly or weekly deposits. There's a Wealthfront app for the convenience of access to your account from nearly anywhere. There are no fees to open or hold your cash account with Wealthfront. And there are no money transfer fees charged by Wealthfront. They have an easy and fairly simple online application process to open your cash account. They'll ask you a few questions that are personal in nature to identify who you are. So be prepared for that. It shouldn't take more than about 5 minutes to complete. If you're transferring money from another account, make sure you have your bank routing numbers available so that you can input that information. Now, you can also open your account with just $1 deposited in the account. They also offer some free, easy-to-use financial planning tools on their website you can use to help you reach your various savings goals. Did I mention that they pay 2.51% annual percentage yield? Well, how is it that they can actually pay these rates? I cover this in our video Markets by Goldman Sachs if you want more detail. But here's a brief explanation as to why online banks like Wealthfront pay a much higher rate than national banks and local credit unions. There's this thing called the Fed fund rate. And I'll try not to get, too deep in the weeds here, so hang in there with me. But I think it's important to understand. The Fed fund rate is the interest rate banks and depository institutions lend money to one another, usually on an overnight basis. You see, banks must keep a certain percentage of depositors' money on reserve that the banks don't earn interest on. Banks use these overnight loans to stay as close to the reserve limits as possible without going under them to maintain the proper level of reserves. The Fed's current target rate is between 2.25% and 2.50%, and as of this video recording, it's at 2.50%. So, why is that important to know? Well, if the banks can borrow from you in the form of deposits at 2.25%, it's actually cheaper than paying the Fed fund rate. So, what some of these online banks have done to be able to offer these great rates is lower operating costs by cutting back on non-essential services and replacing a lot of people with technology, and they use some of that savings to pay out slightly higher rates to entice more borrowers. This is what you're seeing with many of these online banks paying higher rates of interest. For instance, to get that 2.51% annual percentage yield at Wealthfront, you lose the ability to talk to a human for customer service. All inquiries at this time are only through email, which could take a day or two unless you have an existing investment account, in which case you must log in first and then they'll give you access to a phone number that you can call. So if you want more human and slightly more immediate communication, this actually might not work for you. So just kind of give that some thought. You know, if you like what you're hearing so far, hit the like button and subscribe. The disadvantages of a Wealthfront cash account. Let's get into those things so you know what those are. You cannot link payment services like Venmo or PayPal or Square to your Wealthfront cash account, and bill pay is not available out of your Wealthfront cash account. These are all features they're talking about in the future, but I'm telling you right now they don't have them. There is no debit card, so you don't have that. There's no check writing privileges, so if you need a lot of access to your savings account in a single month, you know, you might actually want a checking account and not a savings account. Interest is compounded monthly rather than daily. Now, this is not so much a disadvantage, but I think some people get so hung up on this, I thought I'd list it here anyway. So to actually calculate it compounded monthly, you simply divide the annual percentage yield by 12 months and then to calculate the compounded daily figure, you just divide the annual percentage yield by 365, number of days in a year. The difference between the two is fractional unless you're talking about hundreds of thousands of dollars, and even then, it's not that significant. When the interest rate is expressed in terms of annual percentage yield, the compounding effect is already taken into account. So the annual percentage yield is more important than the fact your money is compounded daily or monthly. So you say, D, this is great and all, but are Wealthfront cash account rates guaranteed? Well, no, they're not guaranteed. If you want a guaranteed annual percentage yield, you'll need to lock up your money in a CD. That's a certificate of deposit for a period of time, which means you lose some liquidity. But that's true really of any bank. Their cash savings account, that Wealthfront's cash savings account rate will fluctuate along with the larger changes made by the Fed. As we speak, the Feds are preparing to make a possible rate adjustment, so we'll have to see how that impacts the rates for these online banks. If the rates go down, we may see online banks adjust in kind. If the rates go up, well, we may see online banks get more aggressive with their online savings account rates to attract more depositors. So, is Wealthfront legit? Well, after digging in through everything that I could find, I'd have to tell you, yes, it is legit. If you're in a savings account that is paying closer to the national average of 0.10% annual percentage yield, I'm going to tell you, it's definitely worth taking a look at. If you already have an account paying 2.25% versus 2.51% that the Wealthfront cash account is providing, well, you'll have to decide if the move is worth the 0.26% increase. Be sure to check out our video, Best Savings Accounts in 2019, for comparisons of several other online banks, and our recent review of Markets by Goldman Sachs for an in-depth look at what is really required to get their great online savings account rates. If you like this video, give us a thumbs up, and obviously, please subscribe. Hit the notification button to be notified of the most in-depth online reviews of the best savings accounts in the U.S., one of the highest paying savings accounts in the U.S., and why you might consider switching. Today, I'm going to summarize the pros and cons of Markets by Goldman Sachs, one of the more popular online banks on the list. If you're not earning at least a minimum of 2% rate of return on your savings account? You gotta ask yourself why not. Here are at least 5 good reasons to save your money in a savings account.